Hey guys, this is Rudy coming at you live from Palm Beach in Florida. What day is today? It's Thursday. It's November the 17th. So it's a few days after Occidental Petroleum reported their earnings for the last quarter. Before we go into the 10Q, which I want to share with you, I just want to share with you this one tweet from today. I'll just read it quickly. The oil market remains tight, according to Saudi Aramco, the largest oil producer in the world, and that does not bode well for a world that still relies heavily on fossil fuels. Today, there's spare capacity that is extremely low, said Saudi Aramco's CEO, Amin Nasser, at a conference in London. If China opens up, the economy starts improving, or the aviation industry starts asking for more jet fuel, you will erode this spare capacity. And Nasser warns that the oil price could spike quickly again. So just sort of as a brief introduction there, this is coming from obviously Saudi Aramco. And it's material and meaningful from the point of view that pretty much anyone who follows oil and gas knows that there is a shortage. There is already a shortage on diesel. And if anything sort of triggers demand, then there's going to be a supply crunch, which could make oil prices spike again. And will it happen or will it not? We don't know, right? Nobody has a crystal ball. But it's interesting to pay attention to the macro because obviously at the end of the day, it's going to impact your investment decisions and mine. So on a lighter note, let's move on to Occidental Petroleum's quarterly results very quickly. I have a little cheat sheet over here with me in my hand and looking at the revenue, 9.5 billion. The estimate, analyst estimate was 9.41, so an easy beat on revenue on the top line. Earnings per share, small miss. Came in at 244. The estimate was 249, which arguably means the analysts were wrong or they miscalculated. But anyway, that's how it goes, right? Average price for the quarter on a barrel of oil equivalent, $94.89. The estimates were calculated using an average for the quarter of 94.16. Oxy managed to do a $3 billion stock buyback and have now reduced the debt down to about 19 billion. So that's sort of the highlights reel. As a general rule, I have shared with you before that Oxy is not as interesting to me today as it was before for a variety of reasons. The primary reason is that Oxy is kind of now just me too, sort of a mundane, everyday kind of stock. But let's take a deeper dive here into the 10Q that they filed for the quarter. So the blue column over here on the right-hand side is September 30th, 2022. And the black line on the right-hand side compares the full year up to December 2021. So it's not a direct comparison, but it's still interesting nevertheless. I'm looking here at the balance sheet. Remember, the balance sheet is basically assets have to equal liabilities and shareholder or share owners' interest or equity. So we have total current assets as of the end of September of about 8.75 billion. Now that's important because we want to make a comparison when we do a current ratio between the current assets and the current liabilities to see that it's 1 or greater. So keep in mind 8.75, just to round it up there a little. Total assets, 72 billion. Last year for the full year was 75. So we can look for the differences or the anomalies as we go through the 10Q. And here's your current liability. So I have 7.935. So effectively, I have a ratio that's favorable because it's 1 or greater, which is what I'm looking for. Current assets versus current liabilities. Current assets, cash and equivalents, compared to current liabilities, bills that might be due within the next 30 days or so. Oxy has more than enough current assets to cover its current liabilities. So as a quick snapshot, when you look at the balance sheet, that's one of the first things that you want to look at. The net debt. So as of the end of September, obviously we're already now midway through November. It was about 20 billion the previous year. At the end of the year in December was 29 billion. So you can see they knocked about a $10 billion dent in the long-term liabilities, which has exactly the inverse effect on shareholders' equity. So our equity as Oxy long holders is now at almost 29 billion, whereas at the end of last year it was about $20 billion. So Occidental is performing really well for us as shareholders. Thank you very much. So this is the statement of operations. There are a few things that are interesting for me here. So the columns look a little different here. So we had 3 months dated at the end of September 30th. So in other words, 9 months, 2022 compared to 2021. And we can see net sales was 6.8 billion in 2021. It's now 9.4 at the end of the third quarter in 2022. The thing to keep in mind there is that Occidental hasn't significantly increased production. In fact, it's been fairly flat. So the increase in net sales is actually directly as a result of the higher price of oil for the last 3 months, and then for the first 9 months ending September 30th. We're comparing again apples to apples here. So we have 9 months ending September 2021, 18 billion, and up 10 billion for 2022. We look at costs and other deductions, and you can see the total costs and other deductions, the bottom line over here, has been a slight uptick. And the reason why I'm highlighting this is because this is actually not bad at all. When you look at the numbers above, and let's just look at the sort of 9 months of the year. So we had 18 billion in net sales, which is now 28. But if you look at the actual total of costs and other deductions, last year was 17.2 billion, and this year it is only 17.97. So $700 million is actually a very slight increase given the fact that we are in a hyperinflationary environment, and everything that Oxy touches, effectively pretty much like any other company in the E&P space, human resources, sand, steel, etc., everything is costing them more. So great job by the management. They are doing an exceptionally good job. Per common share, so net income attributable to common shareholders fully diluted. Last year compared to this year, it's a huge swing. And if you look at the 9-month period, 65 cents compared to 252, very favorable for investors. So it's one of the reasons why I say it's kind of like meh, sort of like me too now. It's no longer exciting, but there are some exciting highlights here. So how about this cash flow, net income? In 9 months ending September 30th, 2021, 785 million. 9 months ending September 30th, 2022, 11.3 billion. Not bad, huh? Operating cash flow from continuing operations was 7 billion, now almost 13 billion. Cash flow from financing activities, payments of long-term debt, 4.5 billion, 8.3 billion, right? Nice numbers, huh? Treasury stock. The reason why I'm highlighting treasury stock is because people sometimes ask me what happens to the common stock when Oxy buys back its own stock. Well, it appears on the balance sheet as treasury stock, and you can see that the total value of treasury stock, well, let's look at this one now because this is as of June 30th, 2022, over $13 billion in treasury stock. So when they buy back stock, that's where it gets parked on the balance sheet. Let's scroll a little further and you'll notice that the 10Q, if you look at the top here, has 66 pages. Don't worry, I'm not going to go into all the 66 pages with you. I've just highlighted some things that might be of interest to you. Berkshire Hathaway ownership, a related party of Occidental due to its ownership of Occidental's common stock during the third quarter of 2022. Berkshire Hathaway increased its ownership in Occidental to approximately 194 million shares of common stock. Occidental has from time to time contracted with Berkshire Hathaway for the provision of electricity, rail, and insurance. These are not material issues, but they're mentioning them. In addition, certain Berkshire Hathaway subsidiaries purchase various chemicals from our chemical segment. It's also not really material, otherwise they would put a number next to it. While these types of transactions between Berkshire Hathaway and Occidental have not been significant, Occidental will continue to assess the financial significance of our transactions with Berkshire Hathaway and its subsidiaries. Well, it's material from the point of view that Berkshire Hathaway is a substantial owner, in fact, the largest owner of Occidental Petroleum, and as a result, they need to disclose this type of information between related parties. How about Occidental, the other way around, in terms of its ownership in WES? So Occidental sold 10 million limited partner units of WES for proceeds of $253 million. Occidental does this from time to time, especially from quarter to quarter, because by doing so, they are raising enough liquid cash to actually settle Berkshire Hathaway's coupon, which is about $200 million per quarter. This resulted in a gain of $62 million. This is important too, because if you're selling stock to the value of $253 million, but there's a gain embedded there for $62 million, that means you only sold effectively $190 million worth of stock, but you got $250 million worth of gain. As of September 30th, which of course impacts your tax, but we'll come back to tax in just a minute. As of September 30th, Occidental owned all of the 2.3 non-voting general partner interests and 49. They actually, in previous calls that I've had with the investor relations group, they've said that they want to maintain their ownership in WES at around 50 or just below. And currently Occidental has 49.4% of the limited partner units in WES. On a combined basis with its 2% non-voting limited partner interest, Occidental's total effective economic interest in WES and its subsidiaries was 51.5. At the end of the current quarter that we are in right now, they'll probably do the same again, sell a few million shares, raise about $200 and something million, and pay Berkshire Hathaway's coupon of $200 million in cash. Revenue from customers is recognized when obligations under terms of the contract with the customers are satisfied. The reason why I'm highlighting this one for you is because people sometimes say or ask, how does the price of futures, when we look at the price of WTI, for example, correlate or match up to the actual sales as achieved or as reported by the company? So there's obviously a lag because the futures price is approximately, let's say, 6 weeks out from where we are today, but there are closing contracts today. So there is always a bit of a delta between the futures price as we look at it. So if you say WTI is trading at $84 today, for example, it's not really material in terms of the sales that were actually booked under the accrual financial system that they're reporting under today, because they might have sold that oil at $88 or $80 or whatever the case might be. So the futures price does not correlate directly to the price that they drive in terms of actual revenue. What is interesting here, revenue from customers, once again, 2021 to 2022, comparing 3 months and 9 months, look at the difference. For 9 months, September 30th, 2021, 18 billion. For 9 months, September 30th, almost 28 billion, a $10 billion uptick. And that's why we have a $10 billion swing on the balance sheet in our favor as shareholder equity. This aggregation of revenue from contracts with customers, the only reason why I highlighted this one is because people sometimes ask me, what is the impact of the price of natural gas, for instance, on Oxy's revenue? How much is OxyChem as a ratio, as a contributing factor, because OxyChem is very, very profitable. You can always look at the balance sheet. You can look at the 10Q that they file every quarter, and then you can do the math yourself in terms of the ratios to see exactly where the revenue comes from and how much of the revenue is the greater or the lesser in terms of what they are generating in terms of production. So let's go a little further. So I'm on page 14 of the 10Q right now, and here you can see it in dollars. So the previous slide that I showed you over here showed you a breakdown for 3 months, and if I go to the next page, it's actually showing you 9 months. So again, you can do your math yourself if you want to see how much of Occidental's revenue is WTI. At the end of the day, it's their greatest source of revenue. But to be fair, their greatest source of profit is OxyChem, which contributes on a prorated basis more profitability than anything else that Oxy is currently doing. How about long-term debt? I mentioned that right at the start when I gave you my little notes from my cheat sheet. The debt now under $20 billion. I'm not sure of the number here, but if Oxy can get its debt down sort of into the high teens, maybe 15, 16 billion or so, it would definitely be investment grade status. Debt activity, you can see some of the things that they've been doing for the 9 months ended September 30th, 2022. Oxy used $8.3 billion of cash to repay debt maturities ranging from 2022 through 2049 with a face value of 9.4 billion and a net book value from 8.7 billion, which resulted in a gain of $143 million. As a general rule, if you settle some of your long-term debt early, you do save money. And of course, on a longer-term basis or medium-term basis, you also save money on the interest that you would have paid on that debt. In October, Occidental exercised a par call for all 340 million of its 2.7 senior notes that were due February 2023. That's important because February 23 is just right around the corner, and those notes have now been redeemed as of November 15th, which was just 2 days ago. Fair value of the debt, Occidental's estimated fair value of debt as of September 30th and December 31, 2021, substantially all of which was classified as level 1, was approximately 18.6 billion and 31.1 billion respectively. So December 31, 2021, 31 billion, September 30, 2021, under $20 billion. Not a lot more, than I'm going to wrap it up. The value of cash flow hedges was insignificant for all periods presented. People frequently ask me, hey, Mr. Oxy, how much are the hedges costing them? What are they doing? So as opposed to trying to quantify it, let's just rest with the line that they've added just saying that the value of cash flow hedges was insignificant for all the periods presented. A little bit further, looking for my next highlight, gains and losses on derivatives. So it's important to kind of understand what a derivative is in general. So let me just pause here for a second. I'll go back to the 10Q in just a minute. A derivative simply means that the instrument that you hold or the note that you have has a derived value based on something else. And frequently that would be something else as in a price and a date, right? So for instance, if you think of something like the warrants that many of you hold, that's a sort of a classical example of a derivative because it has a derived value at a future date, which is its termination date, and a strike price of $22 per share. So if you hold the warrants, you're actually holding a derivative that says you are allowed to buy Oxy Common for $22 until a certain date in the future. Let me go back to the 10Q. And I don't remember exactly why I highlighted this. I think I just wanted to talk about gains and losses on derivatives in general. None of these numbers are material because they're simply too small, right? So 9 months ended September 30th, you're talking about gains or losses related to derivatives. These are gains because they're not in brackets. Interest rate swaps, 330 million. Marketing derivatives, 473 million. It's kind of just business as usual, no big deal, right? This one I highlighted before in a previous quarter, legal entity reorganization. This is material because you're not going to see this again. This happened in Q1 of 2022. As a result of a legal entity reorganization, management made an adjustment to the tax basis in a portion of its operating assets, thus reducing Occidental's deferred tax liabilities. Accordingly, in the first quarter of 2022, Occidental recorded an estimated non-cash tax benefit of $2.6 billion in connection with its reorganization. Why is this important? Because this is effectively a net gain based on some paper shuffling of $2.6 billion. You're not going to see it this year again, and you are not going to see it next year again. So if you're looking at the sort of cash flow analysis, and there are people on our channel who are quite adept at doing a discounted cash flow model. One of my friends, Kevin Zauer, who does that quite well. You have to make certain assumptions. So you have to sort of assume what the price of WTI is going to be for 2023, like, let's say $80 a barrel. And of course, you could be wrong either way because it could end up being $65 a barrel or it could end up being 120. So when you make assumptions, you don't know. The reason why I'm pointing this out to you is because we've had a bit of a windfall, for lack of a better word, in 2022 of $2.6 billion that you're not going to see again, and certainly not going to see very easily. Now, here's a bit of a laughing matter. If you're a US citizen or voter, you probably know about Biden's famous Inflation Reduction Act, which should have been called the Hyperinflation Act. But in August 2022, so just a couple of months ago, Congress passed the Inflation Reduction Act, which, by the way, does absolutely nothing to reduce inflation. But anyway, they like to give it names that at least give you a little bit of a feeling that something is being done to some situation or macro environment which feels horribly wrong. Among other provisions, the corporate book minimum tax on financial statement income and excise tax on stock buybacks, certain tax incentives related to climate change and clean energy. Occidental is currently evaluating the provisions of this act. I don't want to go too deeply into the Inflation Reduction Act because we'll need to see what the new Congress does, because Congress is now controlled by the Republicans. There's a really good chance that being government, they'll probably just do nothing. But anyway, we'll have to wait and see what the ultimate impact of the Inflation Reduction Act is going to be, not only on Occidental, but all the energy companies, including Occidental and companies like Occidental. What have we got here? So income tax expenses, 9 months ended September 30th. So we're looking at income tax here. I mentioned tax briefly earlier on. I always look for anomalies or strange things that jump off the page at me. Here's one of them, 3%. 9 months ended September 2022. The worldwide effective tax rate is 3%. It's like, are you kidding me? It's too good to be true, right? So here's the note at the bottom. 25 and 32% worldwide effective tax rates for the 3 months ended September 30th, 2022 and 2021, respectively, and 27% for the 9 months ended September 21. And then international income tax is subject to tax at statutory rates as high as 55%. So I was like, whoa, 3%, where'd you get that from? These effective rates differ from the 3% tax rate for income from continuing operations for the 9 months ended September 30th, 2022, which was impacted by a non-cash tax benefit associated by Occidental's legal entity reorganization, as described above. Well, I just mentioned that to you. We had a windfall of $2.6 billion in terms of deferred tax, and that's why the tax rate is 3%. So that is an anomaly, and that's not something you're going to see again. As they pay more taxes, that means their expenses increase, and effectively your earnings per share would dip a little bit commensurately. I don't know if I have anything more on here. Let me just quickly scroll a couple of pages, a couple more highlights. As of September 30th, Occidental has 104.1 million outstanding warrants with a strike price of $22 per share, and 83.9 million warrants with a strike price of $59.62 per share. 83.9 million warrants, these warrants at $59.62 per share are held by Berkshire Hathaway, and the rest of them, the 104 million, are held by just one guy, Kevin Zhao, and maybe a couple of your friends on this channel. Well done to the people who invested in warrants. You have done really, really well. Anyway, the warrants, as I said a minute ago, is a classic derivative and allow you in the future to either cash them out, you just trade them because it has its own CUSIP, or otherwise you can ask your broker to convert them to common stock, and the stock price would be $22, which is the strike price per share, plus whatever your cost was on the warrants when you were either awarded or granted those warrants, or when you purchased them in the marketplace. Calculation of basic and diluted EPS attributable to stockholders. Income from continuing operations. This is really interesting as a number. 9 months ended September 30th, 1.2 billion in 2021, now 11.3 billion. So there's that $10 billion delta again that I mentioned just a minute ago. Look at the diluted income per common share difference, 2021 to 2022. Segments, so we talked a little bit about that in terms of how you can do your own math to kind of decide how much of the revenue is WTI and whatnot. Debt ratings. As of September 30th, 2022, Occidental's long-term debt was rated Ba1, uppercase B, small lowercase a1 by Moody's Investor Services, capital BB plus by Fitch Ratings, and BB plus by Standard & Poor's. Occidental received credit ratings upgrades from all three agencies in the period from December 2021 to March 2022. Any downgraded credit ratings could impact Occidental's ability to access capital markets and increase its cost of capital if there's a downgrade. In addition, given that Occidental's current debt ratings are non-investment grade, Occidental or its subsidiaries may be requested, and in some cases required, to provide collateral in the form of cash, letters of credit, surety bonds, and other acceptable support as financial assurance for its performance and payment obligations under certain contractual arrangements, such as pipeline transportation contracts, environmental remediation obligations, oil and gas purchase contracts, and certain derivative instruments. So if Oxy's debt is downgraded, that could impact Oxy's ability to access capital markets and increase its cost of capital because you're paying a higher interest rate. So conversely, if Oxy achieves investment grade on its debt, then the reverse of what I just read here is true. The reason why this is material is because collateral in the form of cash, letters of credit, surety bonds, and other acceptable support as financial assurance all cost money. If you go to your bankers and you ask them for a letter of credit, they'll say, sure, you can have a letter of credit and the cost of doing so is X, whatever that might be, which increases your expenses, which will decrease your earnings per share, right? So we don't want that. I think, well, I'm on page 32 and I'm scrolling, I don't see any further highlights. So I think sort of in a nutshell, that is kind of the wrap on Oxy's 10Q for the quarter. in the greater scheme of things, it was a good quarter. The revenue beat was sort of more or less in line with the estimation. So 9.4 billion estimated, 9.5 the actual number. The earnings per share miss of 5 cents, $2.49 estimated, came in at 2.44. Not really material. If you're long in Oxy, you're probably okay. If you're long in Oxy warrants, you are probably feeling wonderful. But there's not really a lot to report on Occidental Petroleum right now. If you're still long in Oxy and you're holding on to your Oxy shares, it's not a bad place to be. If the question were to be, can I buy Oxy now at about $70? Well, sure you can. I wouldn't really be interested in doing that because I don't see Oxy going from $70 to $140, for example. Not that I'm greedy. I'm just saying if you're looking for 2 times, you could probably get it much easier on something else. Would I hold Oxy? Well, I am holding Oxy. I'm not selling it at this price. Also, don't want to sell it at this price as we close out 2022 because I don't want the tax obligation. So maybe I'll take a look at that again next year. So for that reason, I'm not selling Oxy either. So guys, that's kind of where I'm at. So you can let me know in the comments what you think. But at the end of the day, I think Oxy is a good stock for us to hold, but I wouldn't buy it and I wouldn't sell it. So that's my take based on the thank you. Look forward to your comments. Talk to you soon. Bye-bye.